The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Another interesting market day on Tuesday with mixed activity in the grains and oil seeds. New midday model runs maybe giving us a bit of strength in corn and soybeans on Tuesday, while livestock trade had a pretty solid day across the board as well. Joining us now to talk about what is happening in the markets, try to make sense of things, Matt Bennett with agmarket.net, our guest here today. Matt, it's good to catch up with you, my friend, and I hope things are going well. I hope you had a good weekend.
Yeah, we did. I mean, it's been good. We actually we're dry as a bone, of course, right here in Central Illinois. I think it's one of the driest areas you could be in this year. Now, hey, you know what? We had a phenomenal year last year. Every time you turned around, it rained a half inch. So maybe we're due for some issues here, but it's been dry. We've been able to basically get caught up on everything that you'd ever want to do, but little things like hay, how much hay did we come up with this spring, early summertime period, way lower than normal based on a really dry spring. And it's very interesting because we don't start getting rain in this part of the world, which don't have as many cattle as west, but hay's going to be a super hot commodity. So it's an interesting start to the summer. And I would assume we're not going to have any, but nobody's going to have to mow, until it rains. I mean, we got dead yards already, and we usually don't see that in early June.
No, you don't see that in early June. And obviously that's the big elephant in the room is weather. And that's where we should start our conversation. I talked yesterday with Eric Snodgrass, and he was saying, we're watching the weather models and still kind of pushing out the chance for that pattern change next week, potentially. But then, I can always tell when a new model run comes out because around midday Tuesday, quarter beans, after kind of just trading mixed, pushed up to the upside. And the GFS model looks like it's taking some of that rain out, that needed rain. And really, that's just the doldrums of, I don't know if that's the right word to use, but the doldrums of trading a weather market is it's off of every single model run and weather forecast that comes in front of us, Matt.
Yeah. If you're trying to trade a weather market, you're either going to get your lunch handed to you or you're going to be feeling pretty good at the end of the day. But bottom line is Jim McCormick on my team yesterday, he posted the noon run. And man, I'll tell you what, the noon run showed a lot of rain in Central Illinois. It's the first GFS model that I've seen that gave really good opportunity for Central Illinois to get a big rain. And so I tweeted back at Jim. I said, hey, that's what we're going to hold right there. No more models. That's the one we're sticking with. Let's see this one verify. And of course you get one in the evening, you get one in the morning, and then like you say, you come in here at noontime here today, and all of a sudden the rain's all gone. And so I don't know. It seems to me that the better model has been the Euro here lately. You talked to Eric. Eric was just on our webinar last Monday. I know that he's struggled with a lot of the indicators he was looking for to bring El Nino on have kind of been slowed down, if you will, by some different factors. Of course, I'm no meteorologist, but there's no doubt that the environment's different than what it was during La Nina, but we have some very unique situations going on, with that pool of cool water off the West Coast. And then, of course, you've had a low pressure system off the East Coast, and it's just been a dynamic that really hasn't been able to afford us the kind of pattern shift we would like to see with El Nino. So, it's just kind of a, it's kind of a wait and see type thing. And so the market is, in my opinion, Jesse, you could tack 50 to 75 cents on this market or take it away, in a matter of, a couple of sessions. Of course, you'd have an expanded session of, I'm telling you, I think it could go very rapidly sometime in the next 2 to 3 weeks. I mean, we're a little early yet for a weather market. Let's be clear about it. But if you see a pattern shift, and then all of a sudden, not only do you get a widespread, 1 to 3 inch rain throughout the Midwest, accompanied by a forecast that shows really good rainfall coming up. I'll tell you what, with the kind of start that we've had, with the kind of acres we're going to end up having, we know we got a lot of acres planted because the weather gave us the opportunity to do so. I'll tell you what, it'd be pretty tough on these markets.
Well, you mentioned in there, you're not a meteorologist, but you are a farmer. Right. So I'd like to pick your brain a little bit of that farmer expertise here. I know the dryness concerns really Iowa and then east of the Mississippi, the Eastern Corn Belt is where a lot of this concern is right now with our quartered soybean crop. In your eyes, Matt, how much damage are we doing, if any, right at this time frame here this week to this crop?
Yeah, here's the thing. You talk to any agronomist, and they'll tell you you're going to set your ear size sometime in that V5 to V8 range. There's a lot of corn, the early planted corn. That's exactly where we're at, like V7, V8, which is, I believe, the sweet spot as far as setting your ear size. You don't want to have a lot of stress there. This last weekend, we had 96 degrees on Saturday, and it was windy. I mean, it's the worst possible weather you could ever dream of, as far as trying to keep stress down. Most of the corn in my part of the world, I'll be honest with you, last Saturday morning looked awful good, really, really good. At noon, it looked like death warmed over. I mean, it was rolled up. We typically don't roll up the first few days of June. I mean, it's just not something that we've seen oftentimes in my part of the world. I know you move farther east. One of the guys that works with us on the JSA side has had to go through and just do office visits, and he was in Indiana yesterday afternoon and said that he thought our crops right in here looked pretty good. And the farther east he went, he said the worse it got. And so I know there's a lot of folks that are really struggling for moisture at this stage. And given the stage of development for corn, it's concerning. And I would assume that it's going to hamper the ear size somewhat. Now, let's be clear. If you have really good grain fill, in the month of August, you could probably make up for a fair amount of that. But I do think that you've probably dialed down the maximum yield potential in the hardest stressed areas of the Corn Belt over the last several days, especially if this lasts for another week to 10 days, which is what most people think is going to happen.
Well, I appreciate the insight there. And looking at quarter beans, I'll focus on corn first. Closing back above, I think, some key objectives on the day. Tuesday, I know D's corn got back above 541 at the close. To me, chart wise, that feels like that level that we kind of need to stick around here until we can get some confirmation one way or another, to your point of how we could tack on 50 cents or take it away, et cetera, et cetera. That 540 level seems pretty crucial in D's corn right now, Matt.
Yeah, it sure does. We've kind of been on both sides of it here and there. In my opinion, it seems like when we get up towards 550, we hit some initial resistance. And I think to push up and above that, you're probably going to need, as you get towards the end of this week, some drier models to continue to converge. Now let's just be clear that the euro has been drier all along than the GFS for quite some time. Today, when you come in at the noon model and GFS is starting to come in more agreement with the euro, I think that if you verify that over the next 4 or 5, 6 runs, I guess in my opinion, the trade's going to start to get a little more nervous. And so, what does that mean? What does that mean for price? Are the funds going to buy into this? Typically, the funds build a long position through the month of May into mid-June until we see what kind of weather we're going to be looking at. It's just kind of a weather hedge, if you will, of their risk, whereas they built a short this year. And so essentially what's happened over the last couple weeks is that they didn't necessarily want to go long, but they were covering shorts. They said, well, maybe we got the cart ahead of the horse this time, and because, they were awfully bearish. Nobody seemed like they wanted to own corn. And then all of a sudden you start crunching numbers. You say, well, shoot, what if this is a 170 or 172 yield? I don't think that's the case right now, Jesse. I think you're going to have some pretty harsh conditions maintained for another 3 to 4 weeks for that to happen. But it's certainly in the realm of possibilities right now. And so you don't want to be caught carrying this huge short position into what you would call a major production affecting weather event. And so, at this stage of the game, when are the funds going to maybe step in and really buy? I think that if you can get these models to converge, I think that you better be cautious if you're caught short there, because it certainly could be a rip your face off type rally.
Matt, do you think that maybe some farmer selling is capping a little bit of the rallies here so far this week in the grains? And I think that could be old or new crop conversation here. It could be both. But do you think that's maybe a bit of what we're seeing as well here?
Yeah, I do. I think there's some hedge pressure coming in here. I also think that some of these cash prices, at times you've seen basis kind of pull back a little bit, and then all of a sudden the processor the next week, goes back to the 50 over, 60 over, whatever it was they were bidding. A producer looks up and they see July corn up double digits. Most people are still bidding off the July. I really don't know anybody that's gone to the SEP yet. That's coming though. Let's be clear. That's going to come here before too long. And so, if July's up double digits, all of a sudden you're saying, well, I'm north of 650, 660 type ball game here. I'm going to go ahead and sell some corn. I do think there's some hedge pressure there, and I also think there's some folks that feel like maybe they needed to make some catch-up sales as far as new crops concerned. It's pretty hard to do it closer to 5. I know a lot of folks break evens whenever you take the basis off of $5 D's corn. Just doesn't look like you can even make much money there. Your insurance is probably going to protect you, especially if you're at the 85% level. So I don't think there's much selling down there. It's a different story when you get up, 540 type area, pushing 550. It's a little different discussion. So I do think some folks have stepped in and sold, but at the same time, I don't think you're going to see wholesale selling until you get north of 550, maybe more like a 570 type area, which I think is in the realm of possibilities here.
We're having a conversation today with Matt Bennett of agmarket.net. Matt, on the soy side, one other note, bean oil fairly strong on Tuesday, seemed to help give some support there. When we look at this soybean market as a whole, we continue to watch Brazil dominate the export market. Demand from China, though, could be lagging a little bit. And then you throw in the weather and beans, too. I know it's a concern, but beans have a little bit longer, it feels like right now, Matt.
Yeah, I mean, this bean market, it's had a couple of good days here and there, but at the same time, it's you look at the charts, man, I'll tell you what, it's been getting beat up, like a rented mule here over the last couple months. I mean, it's just been a rough go on this bean market. The Brazil crop just seems like it's getting bigger all the time. They talk about China's going to maybe have a little more demand than what we originally thought. But, when you start talking about 87.5 as your starting point for soybean acres, and then maybe some acres switched over, like in North Dakota, for instance, some of those discussions, I think, have just kept a lid on the bean market. And people are saying, what? So what if it's a 50 bushel crop? The kind of acres we've got, given world supply, we're not going to be hurting for beans anytime soon. It just seems like beans haven't been able to get anyone interested, in stepping in and really getting long. Now, the funds had been long. That long has shriveled up to basically nothing, but it's the same type of discussion as corn. Corn is very reactive anytime you get into June, moving towards July. Everyone knows we don't want to go into pollination excessively dry. We need some moisture in the atmosphere. We want to be able to get pollination to take place in a decent fashion. But soybeans usually have a little more time. They're made in August. But here's the thing that bothers me, Jesse, is we got our beans in the ground early here, and they don't look too bad. But summer solstice is coming up. We all want to be flowering by then. And if I've got beans that are shoe top high, big freaking deal if it's summer solstice, And so I think a lot of folks are very concerned in the agronomic side of things and the farming side of business because the beans aren't growing much. We've got to get some rain in here at some point, especially in the Eastern Corn Belt, try to get some growth here. But a bean market just hasn't cared, really hasn't paid much attention. But I do think that if you take corn on a bender, like I said, like a 50, 75 cent rally, if you don't think beans are going to rally $1 in that sort of a scenario, I got news for you, because it's probably going to happen. Conversely, if we start getting rain and beans drop or corn drops like a brick, I know beans have already gotten beaten up quite a bit, but taking another $1 off the bean market, that ain't no thing. That's not going to be that big of a deal. And so I think it'll happen depending on how the weather reacts. So we've got to be very, flexible in our plans moving forward. And speculation, in my opinion, is highly not advised. I think that a person doesn't want to get cute with a market like this, because it's going to be very intense when the market does decide which direction it wants to go.
Looking over the wheat trade, pretty volatile day there Tuesday. Wheat was our overnight leader. Got that news about that dam being blown up in Ukraine. Plus, Australia's wheat crop sounds like it could be cut by a third due to drought. So a lot of, I think, talk in the trade that global balance sheet could get tightened up a bit here come Friday on the June WASDE report. But then we gave away most of the gains throughout Tuesday's session. I can't make sense of it, Matt. Profit taking, something else? What do you think?
Well, your first problem, Jesse, is trying to make sense out of the wheat market. That's one thing. Whenever I first started in this business, I grew up in a grain elevator and came home from the University of Illinois, and I started doing a little bit of trading. My very first trade, I made 10 cents on the wheat market, and it was a 2 cent or 2 contract deal. Made $1,000. I thought, man, this is easy. And my dad told me, he said, you know what, the best thing you can do is never, ever trade the wheat market again. That's the dumbest thing you ever did. Just don't trade it again. And of course, I did not listen to him. My second trade was, of course, a wheat trade, and I got my lunch handed to me. And guess what? I haven't ever traded wheat again. Wheat is hard to figure out. Okay. So overnight, yes, you get excited. But here's the thing. Some of this Black Sea region news, it seems like it gets more intense at times. And it's almost like some of the stuff that's going on, the wheat market has decided, you know what, it's kind of exciting, but maybe it's not exciting enough. And I don't know what it is that's going to have a lasting effect whenever it comes to Black Sea region news affecting the wheat market, because it doesn't react like it used to. And I think a lot of that is due to, I think a lot of folks are skeptical as to, I understand the dam blew up, and that stinks. And I feel for anybody that was affected by that. But there has been a lot of instances other than that particular one where I think a lot of people felt like, or is someone trying to manipulate this wheat market, with some of the news that's being put out. And I think that a lot of that's going on. And so it's kind of deadened traders, I guess, opinions of whether or not to buy into this stuff. And so wheat market's a very interesting one. You're right. Global balance sheet's probably going to tighten up. But one thing I've always said is that you can fix a balance sheet issue in wheat quicker than you can any of the crops. And so wheat can be grown anywhere. It can be grown on a hillside in India. It's just, that's the way it is. And so we got to understand that can happen. But I am not convinced that we're going to have a great wheat crop here in the U.S. Even this soft red crop that we were also proud of, man, it's just not finishing like we would have wanted to see it finish. I mean, we haven't gotten the moisture. It's very unfortunate for a lot of these folks. I've talked to several of them that are really frustrated. They were looking at potentially the best wheat crop that they'd ever seen, and then they can't buy rain. The driest May on record for a lot of folks in Illinois. And so you get south of me and there's a lot of wheat, but I think that the report is probably going to give us a little bit of a boost, if you will. Maybe not a big rally, but at least some support.
Matt, let's touch on the protein sector here real quick before we run out of time. Pretty robust day Tuesday in both hogs and cattle, and especially that cattle market. It just feels like the fundamentals just continuing to drive that market to the upside. Any thoughts on the proteins?
The cool thing when you look at cattle is today, for instance, you rally cash corn double digits, and cattle are up 260. I mean, this is nuts. It's just absolutely crazy. But, Jesse, I took a lot of flack for a while for being so bullish cattle. You know what? It's not that I knew anything necessarily other than the fact that the fundamentals of the market were so strong that I said something's got to happen at some point, because what's going to happen is this cash situation is going to have to take over. What's cash going to do when people start retaining heifers in the West now that pastures are healing up in places? I'll tell you what, you're looking already, you're pushing 190, on some of these deferred contracts out to next April. At what point do you go into the 190s? Because I think you do. And I'm not so sure that we're not going to see $200 fats on the board before this calendar year is over. I think it's possible. But I do think you get a blow off top at some point. It's probably going to be related to people retaining heifers, and all of a sudden you look up and say, oh crap, cattle on feed is even worse than what it was before. Where are we going to come up with all the beef? And I think that's when you get your blow off top, and you're probably going to set a high that's higher than what it needs to be, and then this cattle market will start to adjust back down the other way. But it's been an exciting ride.
Well, Matt, great thoughts. Appreciate the insight as always. Before we wrap it up today, anything else you want to mention or reiterate to folks here today?
No, just keep your head on straight. I would say 2012 and 2013 charts were very similar to this year's chart. Okay. But from here, we know what 12 did, and 13 ended up just continuing lower. That's what's going to happen, whether we get rain or we don't get rain. And so in 2012, people got super excited and really sold heavily into that rally. In some instances, be very cautious that you feel really good about production, or you know exactly what your insurance policy means to you before you overextend yourself, because you could take a really good year and make it a bad year pretty quickly.
common sense, very important in a market environment like this. And Matt, I know if folks have questions, they can reach out to you and the team there at agmarket.net. You guys have a lot of great content on your website with videos and more. You have the app, etc., or a good old fashioned phone call. There's a lot of ways to get in touch, isn't there?
Oh, absolutely. Just go Google agmarket.net and you'll get a hold of us, be able to browse whatever it is you want to see, and be able to get in touch with us.
Matt, thanks so much for the time. Have a great week, sir. We'll talk to you again real soon. Appreciate it.
Absolutely. Thanks, bud.
Matt Bennett with agmarket.net, our guest today here on Market Talk. That's going to do it for the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.